This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The U.S. will produce less oil in 2025 than previously expected as declining oil prices have prompted U.S. producers to slow activity this year, the EIA forecast on Tuesday in a monthly report. The world's largest oil producer is projected to produce 13.37 million barrels per day of oil in 2025, versus last month's forecast of 13.42 million barrels of oil per day, the EIA said in its short-term energy outlook report. In 2026, the U.S. will produce 13.37 million barrels of oil per day, in line with the previous forecast. Though still a record high, the lower 2025 forecast comes as U.S. producers have had to navigate President Donald Trump's on-again, off-again tariffs that have sparked economic uncertainty, rising supply quotas from the OPEC and its allies, and conflict between Iran and Israel.
The U.S. Interior Department on Monday proposed rule changes to allow energy companies to more easily combine oil and gas output from multiple leases using the same well pad, which could save the industry as much as $1.8 billion per year, it said. The proposed rule change, which would mostly affect onshore oil and gas drilling in the U.S. West, would ease limits on so-called commingling, which the department said would make operations more efficient. Current U.S. Bureau of Land Management regulations restrict commingling to leases that have identical mineral ownership, royalty rates and revenue distribution. Interior said the requirements create barriers in parts of the West where mineral ownership is complex.
Moving on to the top news in the energy sector.
U.S. power consumption will hit record highs in 2025 and 2026, the U.S. Energy Information Administration said in its short-term energy outlook on Tuesday. The EIA projected power demand will rise to 4,189 billion kilowatt-hours in 2025 and 4,278 billion kilowatt-hours in 2026, up from a record 4,097 billion kilowatt-hours in 2024. Those demand increases come in part from data centers dedicated to artificial intelligence and cryptocurrency, and as homes and businesses use more electricity and less fossil fuels for heat and transportation.
Markets are thirsty for oil because they are absorbing OPEC plus production increases without building inventories, United Arab Emirates Energy Minister Suhail Al-Mazrouei said on Wednesday. OPEC plus, which pumps about half of the world's oil, has been curtailing production for several years to support the market. But it has reversed course this year to regain market share and as U.S. President Donald Trump demanded the group pump more to help keep gasoline prices lower. OPEC Plus began to unwind cuts of 2.17 million barrels per day in April with a boost of 138,000 barrels of oil per day. Hikes of 411,000 barrels of oil per day followed each month in May, June and July. On Saturday, the group approved a 548,000 BPD jump for August. Next, we have the top news in metal markets. U.S. copper futures widened their premium to the London benchmark on Wednesday, reflecting U.S. President Donald Trump's plan to impose a 50% import tariff on the metal that would be a pivotal moment for the market if implemented. "I believe the tariff on copper, we're going to make 50%, Trump told reporters at a White House cabinet meeting on Tuesday. According to U.S. Commerce Secretary Howard Lutnick, the tariff would likely be in place by August 1st or even earlier. The premium of the most active COMEX copper futures contract to the 3-month copper contract on the London Metal Exchange that serves as the global benchmark jumped to 27% on Wednesday from 13% before Trump's announcement.
Iron ore futures prices rose for a second straight session on Wednesday, aided by falling shipments and resilient demand, although mixed factory data in top consumer China curbed the gains. The most traded September iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.68% higher at 736 yuan and 50 fen, $102.59, a metric ton. The benchmark August iron ore on the Singapore Exchange was up 0.24% at $96 a ton, as of 0700 GMT. Iron ore shipments from top suppliers Australia and Brazil have fallen after a flurry of ramp-up by the end of the past quarter, analysts at Everbright Futures said.
We will now look at the top news in the agricultural sector.
European Union soft wheat exports in the 2024-25 season that ended on June 30 totaled 20.33 million metric tons, down 35% from 2023-24, data published by the European Commission showed on Tuesday. EU barley exports in 2024-25 totaled 4.72 million tons, down 20% from 2023-24. Competition from Black Sea supplies and the poor harvest in France curbed EU exports in the past season, though the trend has been amplified by missing data.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.